Good morning, good afternoon, ladies and gentlemen. Welcome to this live webinar hosted by MEDICI in partnership with IBM, where we discuss operations and technology in these challenging times, in the times where financial services is drastically changing. Thank you so much for taking your time out of your busy schedules and joining us this morning for this webinar. My name is Salil Ravindran. And I lead the financial services research and advisory practice at MEDICI. And I will be your host for the next 60 minutes. So we've divided the next 60 minutes broadly into two parts. The first 40 minutes will be a panel discussion with a great lineup of industry experts. And then that'll be followed by a short presentation by IBM. So please stay with us till the end of the hour. For the audience, anytime during the session, please use the Q&A facility at the bottom of your screen to ask your questions. We have close to 200 registrations, so a lot of people have tuned in today. We'll take up as many questions as possible at the end of each segment, so please do have your questions coming in. So before we start the panel discussion, let's take a step back and let's take a look at some of the key factors that are driving or reshaping financial services in general. There's a lot of them, but we are trying to distill it down to four very important factors, which are really driving financial services as we see it today. First and foremost, all the investments that are really going into digital transformation across the financial services industry. So practically any organization that you can think of today, be it banks, mutual funds, insurance providers, has been investing heavily in digital transformation for the past few years. And those investments are directed in on both sides, which is to say that investments are going really into distribution of products and services, which is basically the external facing part of digital transformation. And there's also been significant investments happening in digitalizing the internal operations. So digitalizing the enterprise, so to say. Digitalizing distribution and delivery of products and services, pretty straightforward, the reasons behind it. The more you digitalize, the marginal cost of delivering a product or a service comes down drastically, and that's how you scale faster than you would do traditionally. But that's not enough. If you really were to see the complete effect of it and see the best of ROI, then you really need to digitalize what's really happening on the mid and the back office end of things. So which is why companies like ING, if you see, it's a traditional organization. For digital native organizations, this kind of comes naturally. But when a large bank like ING invests significantly in digitalizing the enterprise, rolling out agile methodologies across the enterprise, not just restricted to software development, that really means something, and it speaks of a lot of importance around that. The second big factor is the rise of fintech, as I call it. We've been noticing this phenomenon for so many years. There's nothing much to really talk about it. We don't really need to overemphasize on this fact. If you really look at just the last 2 years alone, the amount of investments that have gone into fintech, the investments that have gone into fintech as a sector is over $100 billion across close to 3,800 deals. We track this very closely at MEDICI. And when we kind of took a region-wise analysis, Asia alone accounts for close to 40% of these numbers. And the investments have been sort of spread across sectors: payments, lending, wealth insurance, and so on and so forth. This is something that we all know, but what is really heartening to note is the model in the industry has really shifted from being an either-or into a whole lot of partnerships and collaboration really happening between the traditional players, the traditional FIs, and the fintech industry. Both of them need each other, and there are very interesting models that are coming out. It has been happening for some time now, and that actually is happening because of largely because of the emphasis on open finance, which is the third point that we have today. We see this prominently in case of banking today, in terms of open banking, which is both regulatory driven as well as driven by market initiatives. So if you look at things which were started off by PSD2 on the regulatory front about 6 years ago in Europe, Australia today, if you look at Asia specifically, Australia is rolling out open banking. India has its own version of open banking with its account aggregation framework. So it could either be regulatory on one side, or it could be not necessarily regulatory, but largely driven by the market itself. And that's actually leading into a lot of marketplace models. And this is also making it easier for big tech companies to enter into financial services. And the fourth important aspect is regulation itself. We've seen regulation in the form of regulating the health of the enterprise between 2010 and 2015, but now we are seeing more of regulation coming on consumer protection, so aspects like data privacy, data protection, data localization, financial crime, and so on and so forth. So these are some of the important aspects. Now, the recent crisis that we are all going through with COVID has actually put a lot of important questions in front. So aspects like resilience of your operational infrastructure and technology infrastructure has become very important. And it is actually posing a lot of questions. How can you really deal with growing volumes on the digital side? Because offline is no longer the most preferred model. It is not sustainable. So how do you really maintain the demand for an always-on infrastructure? How do you quickly make things digital centric? So how do you move your products and services into a digital delivery mode? And as you talk about open ecosystems, that's the flip side of it, is the fact that it brings forward a lot of risk around cybersecurity, cyber threats, and how do you deal with that? So these are some of the important questions that we will look at in our panel discussion today. So without delaying further today, I have the pleasure of introducing three very eminent speakers from the industry today. Our first speaker is Kezad Hiramanik. Kezad is the Chief of Operations and Customer Experience at Bajaj Allianz, which is one of the biggest insurers in the subcontinent. Kezad is an industry veteran with over 23 years of experience across operations and technology. And he's previously held leadership roles at Avanta Ergo Life Insurance, ICICI Prudential Life Insurance, and Bharti Airtel. Our second speaker is Aarti Ranade. Aarti leads the Asia Pacific team for IBM for System Z and Linux One. Aarti has been a technocrat for more than 22 years in the information technology industry. And previously at IBM, she has led large teams in the Asia Pacific region, working on bringing cutting-edge research ideas to the market, specifically in developing software-defined storage products. And finally, we have Joel Yarbrough. Joel is the Vice President for Asia Pacific at Rapid, which is one of the biggest payments and collections enablers in the world with their FinTech as a Service platform. Joel has been in the industry for more than 27 years, spending time across payments, technology, banking, and management consulting. And prior to Rapid, Joel was the global head of product strategy at PayPal, and he's also held leadership positions at Grab. Kezad, Joel, and Aarti, a very warm welcome to this discussion. So I sort of have a context setting question to begin with, which is a very obvious question, which all of us sort of is interested in knowing. So we are going through a crisis, no doubt, and most of the industries, most of the companies, we are seeing an unprecedented shift in the way we manage operations and conduct our business, manage technology. So let me start with you, Kezad. how has your organization really adapted to this whole crisis in the last couple of months?
Yeah, so thank you, Salil, and it's a pleasure being on this forum. And actually, this crisis has thrown up multiple opportunities for us because as an organization, we've been kind of grappling with costs of delivery and infrastructure costs and costs of headcount, etc., for a long time. And this opportunity actually allows us to lighten a lot of these by actually testing out various models. So if you were to ask me, this opportunity is actually a dream for any operations manager in terms of reinventing everything that was held sacrosanct by traditional organizations such as insurance. So if you were to ask me, working from home, have we seen a productivity increase? Of course we have, because in India, travel times and infrastructure isn't great, and it obviously reduces the amount of stress in terms of the physical, the time and the cognitive effort of reaching work. In addition, networks are pretty good in India. I mean, we're going to be a 5G network country in the next maybe a year or so. So people are able to actually log in and work from home. And this is also a wake-up call for our technology teams, because largely technology teams still believe in the brick and mortar model where people are confined to an office, behind a firewall with good quality Wi-Fi networks. Today, people are operating from home on public networks on shared bandwidth, still need to log into firewalls and access heavy applications. So it's a wake up call for all technology teams in terms of rethinking the model in terms of lightening both access and processing capability. And I think the final wake up call actually is to the third party outsourcers. So a large number of Indian organizations tend to outsource to third parties. And I think a lot of them have been caught napping in terms of the fact that they never believed that they would have a situation where people couldn't access a workplace. So that, in my opinion, is going to result in a tremendous amount of, freelancing, getting people in from the gig economy to work from home. And it's only going to add to the efficiency and productivity of organizations that outsource in a large way. Finally, of course, for the customer, I mean, we already had one shock in 2016 when the Prime Minister announced demonetization, which took cash out of the economy and people had to kind of move to the online space to pay. Today, the customer not only is equipped with an entire ecosystem of payment, right from, just 1 rupee up to, as many, hundreds of thousands that he can transact online, but he is also fairly conversant with, servicing himself online, which is great news. And, as we progress in this discussion, I'm actually going to give you some numbers which will startle you in terms of why people should not take customers and customer behavior to adapt to new situations for granted. So I'll leave it at that in terms of my curtain raiser, and leave it to the other guys, and then we'll come back.
Wonderful, wonderful. Joel, let me come to you. You're one of the largest fintech companies in the world. Local payments supported across over 100 countries. So the scale of operations is large, but you are sort of a natively digital organization. So what kind of impact have you seen really?
Yeah, I think from a day-to-day operating process standpoint, it really hasn't been much. As you said, we're a startup, we're digitally native, so all of our services are in the cloud and have always been the cloud. We use SaaS services very heavily to develop specifications, push code, etc. So as long as we have network connectivity, generally speaking, we can do most of what we want to do pretty easily. And there's obviously some scenarios where collaborating with customers is different. But at the same time, I think as Kazad said, once you take people's travel expectations out of the equation, all of a sudden you can actually get quite a lot done, because no one's saying, oh, when we see each other in person, then we'll make that decision. It's more like, all right, call me in 7 minutes and we'll make that decision. So our speed and velocity actually feels a lot faster in a lot of cases. Not all of the customers are ready to buy, right? Because people are in a nerve-wracking situation in a lot of cases. But the latency of decision-making, the latency of action is actually down quite a bit. Everyone's fresher, no one's jet lagged, no one's mysterious on a plane for long periods of time. So if anything, it does actually feel like we're maintaining a certain level of agility because we were, you know, already in the cloud and didn't take a negative hit in that sense. And there are definitely some positives. At the same time, everyone's stressed out. So, you know, it balances out, I think.
Sure, wonderful. I think I'm sure, you know, the native digital sort of a culture is definitely, you know, something that will be making a lot of difference as opposed to what traditional organizations would be. Aarti, you're probably the most grounded of the lot, unable to get onto a plane. So you have, you know, a different view of things from the technology point of view. What's been your experience in the last couple of months?
Yeah, so I mean, first and foremost, IBM is focusing on making sure all the employees are safe, everybody has access to their systems, you know, being able to manage work remotely. But I think most important, the role that IBM is playing is a technology partner, not just for enterprises, but also for governments, you know, government departments, organizations like WHO and CDC. So there is a lot that IBM is doing as a global citizen. We have actually opened our supercomputers for access to scientists and researchers. About 400 petaflops have been made open. This is being actually used very actively in the drug modeling for the COVID-19 drug analysis. There's also work happening in terms of the Watson assistant being able to answer questions related to COVID-19 in about 17 different native languages, right? So that, you know, people who have questions can come and get some authentic information. That apart, the Weather Channel, which is an IBM company, which typically has been sharing data related to pollution and air quality index, has now actually started to share data related to the virus and the trends coming out of it. So we have about 300 million visitors coming and accessing this data at the Weather Channel. So this is what we are doing in the public sector arena, but then in the private sector, we are working heavily with hospitals, financial entities, enterprises, and like Azad mentioned, some of them have been caught napping in terms of, you know, the IT departments always thought that everything can be controlled in sort of a data center environment. So all of those paradigm shifts are happening, and customers are looking at technology partners like us to help them get through the situation. So there's a lot of active engagement happening with these different enterprises, making sure we are able to deal with their challenges. And while both Joel and Kezar talked about it, I think the most important aspect is security, right? When people are changing the work model, I think that's where we have to be extremely careful about what really happens when there's a change in the model. And very important is customers are, you know, financial customers are expecting us to be acting in a very agile manner, right? Because this is a change and the situation is changing almost on a weekly or a daily basis, right? Because the lockdowns are getting extended and so on. So I think agility is the most important aspect that we bring in terms of both products and services to our customers to be able to deal with this situation.
Wonderful. Okay, so, I mean, interestingly, all the three of you come from three different parts of the financial services ecosystem. So let me just move into some specific questions to some of you, and we see a lot of questions that are coming in, so please keep them coming. Use the Q&A facility at the bottom of your screen. We will take up the questions at the end of this panel discussion. Joel, let me come to you. You know, we were taking some statistics in the past couple of months on the back of this crisis that is ongoing. And we've seen a spurt in volumes as far as digital transactions are concerned, specifically on payments. But, you know, you really don't have room to play around with SLAs, even with this spurt of digital volume. So in your opinion, how can an organization build that kind of resilience, and what kind of a role does technology play in that?
I think horizontal scalability, let's say, as a part of it, is something that a lot of folks didn't necessarily have pressure tested. And if you look at some of the spikes in volume across, you know, all aspects of the economy at the moment, so both up and down, I think there's a lot of folks that had incomplete levels of horizontal scalability, incomplete microservices rollouts, et cetera, that would be pressure tested, right? And the teams are now rushing, right? I think the most famous example, of course, is Zoom, that's had to basically 30x their company over the course of 4 weeks because nobody ever expected to happen what's happening. And then there's a cascade downstream to the next 20 or so video operators that are all trying to ramp up in various different ways, who had been planning for a certain level of enterprise support, and now they're basically supporting schools, nonprofits, average people, day-to-day conversation, et cetera. You know, I'm sitting here with my kids, right? And both of them got off of Zoom and immediately turn around and hop right back on another messaging platform during lunch. They finish school, they hop right back on a different platform. So I think that same thing is happening in the payments ecosystem, right? Where you have a huge number of merchants that have to get online immediately, right? They have to get online to platforms that help them post menus, that help them get into delivery ecosystems, help them to sell. And none of those platforms are really scaled to absorb 50,000, 100,000 merchants, you know, in a given week, because no one's ever had that level of desperation before. And so naturally, you know, water starts to squirt out of the pipes everywhere and people adapt. So I think if your organization was already cloud native, you'd obviously be in a somewhat of a better shape, hopefully. If you're using some of the services that are available for horizontal scalability, hopefully you'd be in somewhat of a better shape. But I don't think anybody really can anticipate how badly the system's going to go sideways until you've been punched a couple of times. Then you have to fix as you go along.
Yeah, wonderful. Kezad, let me come to you now. You are a very large entity in the subcontinent, significant number of offline agents operating across the subcontinent. I can only imagine, you know, how difficult it would have been to overnight sort of move them into a digital mode of delivery. How did you manage this miracle?
Yeah, okay. So this is actually, you know, this is not something that was that happened overnight, because for the last couple of years, we've been consciously pushing our sales and, you know, intermediary partners to use their own self-service tools. So not only do we, you know, sit at counters and actually do processing work, we also take it as our challenge to educate our partners in terms of adoption of digital. Now, if you were to ask me when this entire episode happened and India went into lockdown, I don't think anybody anticipated that an office would be out of reach. Right? Because see, we have about 600 offices spread across the country, and, you know, we are largely a hinterland player. And people always thought that, you know, I live in a small town and my workplace is 10 minutes away, so I'll always have access to office. Today with the lockdown, people have realized that, you know, it is important to, you know, use your mobile phone as a business tool, you know, get yourself updated on the latest technology. There has been a huge spurt in demand for actually online educationals in terms of how do I use the tools that, you know, you provided me, but I always took for granted because I had an office counter available to be 10 minutes away. So that being said, I think this entire period is a culmination and a fructification of all those efforts. And today, if I find 100% of all my, you know, new business logins, my, you know, my policy proposals come online through the tablet-based model. My payments are coming online, which, you know, people found impossible to, you know, perceive in the hinterland, saying that, you know, this is largely a cash-based economy. Similarly, my own operations people who are tasked with, you know, building relationships to drive retention and revenue with my customer base in those locations is the happiest, because they were already used to these tools. And the good part, and, you know, this is something that, you know, I always strikes me, is the fact that today we are in the best place situation to talk about insurance, because this disease is very democratic. It strikes the richest person and the poorest person. So, I mean, people do fear for their mortality. And B, very clearly, people have time, right? They're sitting at home and they have nothing to do. So they are willing to do those conversations with us. And C, most importantly, they have money and nothing to spend on other than food. So people have the money to stay invested and, you know, actually go through the entire process of that discussion on, you know, why insurance is important, how our online tools can assist them, what are the options, how they can stay persistent and invested in the long term, listen to market analysis. So in my opinion, this opportunity is not going to come again. And we have capitalized to the maximum in terms of educating both our distribution and our customers to move to the digital medium. This will also throw up some good opportunities in terms of working models, because I'm not sure everybody is going to come back to work, you know, to an office, because there is still fear in terms of, you know, people in closed confined spaces, because social distancing norms do, you know, exist. Along with that, customers are not going to be, wanting to entertain unknown people coming to their house to make sales pitches. So salespeople will be, using Zoom and, the other, online collaborative tools. So in my opinion, we are in for a social revolution. We are in for an operational revolution, and we are in for a, complete payment revolution, if you were to ask me.
Wonderful. Let me move. As a senior technology professional in the industry, what really are the financial institutions that you are partnering with asking right now more than anything else? So what's really been their ask in the last couple of months?
So I think the most important thing is that they need to be always on, right? I mean, they just cannot have a drop in the quality of service and availability. So that always has been of prime importance. But in the current situation, that becomes all the more important because everybody's trying to access things online, and everybody's constantly online. We are also seeing financial institutes try out their disaster recovery centers, right? Sometimes, they make a plan for having a DR site, but it's not always well tested. But now they're seeing that there could be, their main centers could get quarantined, and in which case they'll have to move to the DR site, right? So that sort of, people have started to realize that, and they're making that effort to make sure they're trying out all the resiliency options and how well the system can perform. So there's a lot more seriousness around resiliency, and that's what, and that's the questions that we're getting, and the trials that are being conducted. The other key thing is about flexibility, right? Because there's been a remarkable shift in how workloads have changed in the last 2 months. So I'll give you an example of an Indian bank that we're working with very closely, where they've actually seen a drop in their credit card transactions because, as Kezad was saying, there's not much to buy and not much is available right now. Everything is back to basics, right? So there's been a drop in the credit card transaction, but in the same bank, they're seeing an increase in the net banking. So people are maybe viewing the information more and trying to make a decision. So now there's a workload that has reduced on one side, but there's a workload increase on the other side. And they expect the IT providers like IBM to be able to help with this kind of a balance, right? They don't want to pay more for one and continue to pay the same in the credit card division. Similarly, in Australia, we're actually seeing a huge trend in the online transactions. And there are financial enterprises who had actually taken some capacity or compute capacity on loan are actually deciding that they would rather buy it because, the loan aspect is going to be difficult in the longer term. So basically, I mean, they're looking at all kind of flexibility, right? Whether to grow up, go down, lease, rent, all those options. And that's what they expect the service providers and the IT providers to give. And the third most important, and I can't stop talking about it, is security, right? Because again, this change. So they are getting worried because in the past, usually there were certain operations that would happen in a data center. But now those operations are happening from home, where you don't necessarily have the same sort of security measures in place, right? So they are looking for solutions that will help them through that. So resiliency, flexibility, and security, I would say those are the three things our customers are asking from us.
It's wonderful. Okay. Joel, let me come to you. As a fintech, as a service platform specifically focused on payments and collections, you are spread across the world in different places. So that brings in its own set of complexity and challenges in terms of how quickly you should adapt to the changing face of payments in every country, especially given the emphasis on real time that's going on for the past couple of years. How do you really do this, quick adaptation? How do you really build that sort of a sustainability on your platform?
In our approach, I think you're right. I mean, the world prior to the crisis has been changing very quickly and at an increasing rate, particularly in the payments world, right? There's almost no country in which we operate where the diversity of how people prefer to pay, how they prefer to be paid hasn't gone up by 10x, right, in the last 4 or 5 years, as well as a reinvention of things that maybe looked like popular wallets 5 years ago, dropped dead, and now there's entirely different set of replacements, right? So there's this very, very significant level of change in the ecosystem. And for people who make direct investments in those partnerships, direct investments in that processing, in a lot of cases, they can wildly overspend, and they can overspend on things that are not going to be useful at all once the partner goes out of business. Right? So how we approach that ourselves is to build a network, right? Really focus on what are the core capabilities, what are the core services that we want to offer globally, and then leverage a diverse network of, global banks, local banks, issuers, e-wallets, payment ecosystem, payment processors in various markets, point of sale providers, et cetera. So we have a very heterogeneous network that we use to provide local connectivity in each market. In some cases, we're directly connected. In other cases, we're connecting entirely through our partners. Whatever makes sense, right, to give us the right access to licensing, settlement capabilities, ability to collect, ability to disperse, ability to hold funds in each market. And that level of agility gives us the ability to adapt, right? In the case of, and kind of maybe connecting a little bit to what Rati is mentioning, is the need for us to get into the market very quickly. We've been selling at the enterprise level, we've been selling at the platform level. Now, as of the last 5 weeks, we have, local businesses that need to get online right away, totally different sales cycle. But our focus is then, how do we simplify our onboarding? How do we simplify our KYB? How do we simplify our documentation? How do we make sure that our web-based product works efficiently so people can get online and collect money without doing a deep integration to our SDK or API that might take them more time, or use technology resources that either aren't productive or aren't available necessarily? So how do we start to democratize those services? In our case, we'll announce some additional stuff tomorrow around how we're adapting pricing to make it really easy for people who are in that middle market and below tier to get online very, very quickly, using this more democratized services built on top of this network that's designed to be resilient to change, whether it's catastrophic change like we've had in the last month, or annual or biannual change like we see in most markets for the last 10 years.
Yeah, wonderful. So just to move a little quickly, Kezad, let me just come to you. Bajaj Allianz is, it's been in the industry for a very long time. So in that sense, it's a traditional organization, but fast moving into being a digital centric organization. So what are the key technology levers in that kind of a transition? Obviously, it doesn't happen overnight, and things do stay in a coexistent fashion for a given period of time. So how have you really moved, and what have been the technology levers? How much has cloud really played an important role in this? If you could spend a minute or so on that, and then we'll move on to some of the audience Q&A.
So, like I was saying before, I think what strikes me, of what Joel said was the fact that there is a need to scale very rapidly for businesses which were laggards. Okay, and because we're a largely intermediated business, a lot of our large institutional partners were laggards in terms of integration. So we already have an open API toolkit which actually allows them to plug in, but they still wanted the traditional brick and mortar model, which today they've suddenly realized that this is a great instrument to be selling at these times, because banks are essential services and bank counters are still open. And banks also know the kind of money that you have lying in your account. So no better time to pitch insurance than today. And therefore, I think this one thing that's come out very, largely in this period is the speed of policy making. So a lot of, IT people who had, 150 problems in terms of firewalls and, security issues have suddenly realized that this is the time to be agile to facilitate the business to actually, flourish. So very clearly, open API ecosystem has helped tremendously. Plus our integration with the entire payments ecosystem over the last 2 years has helped tremendously. And very importantly, and I'm glad you brought up this question of the cloud, because a lot of our transactional applications, of course, our core still sits on a hosted server, but our transactional applications which are out there are all cloud-based. And therefore, the ability for us to absorb the additional volumes that don't come from the traditional branch model has gone up tremendously. If I were to give you some examples, 3 years ago, 12% of all my renewal payments came online. Today, as I speak, it is 85%. So that itself should tell you that creating an ecosystem and keeping it ready and just over communicating, So we use a very, we use a 3V strategy, which is the use of voice, use of video, and use of vernacular. Because India is a very, very diverse country, and we use this strategy very, very effectively in terms of over communicating. So I'm not even propounding communication. I'm seriously propounding over communication to customers, because there is no better opportunity than this. Secondly, education of the intermediaries in terms of integrating with the open API system to gain the maximum benefits of having on tap access to us. So we have seen another very interesting trend that typically business hours for insurance in this country, largely for selling, is up to let's say 9 to 4 p.m. and the actual processing is, let's say, 4 to 10 p.m. Today that cycle is steady across all time zones. So when I was looking at online payments typically come in after office hours. Today they're coming in all throughout the day. Today my business logins are coming in all throughout the day. This is again great news because it doesn't allow me to staff or bunch up resources for a particular time period. I can spread them out across. And therefore, it also reduces the stress on the system. So in my opinion, use of cloud, open API system, creating a digital payments ecosystem has helped us tremendously.
Wonderful. So just in the interest of time, we do have a lot of questions coming in, and I do want to do justice to as many of them as possible. Let me just take up a few of these questions, and then we do have another round of Q&A. So we'll come back to some of these questions. Aarti, I do have a few more questions for you as well. So let me just take up the first question. And this is an anonymous attendee. I think the question, probably let me put this to you, Joel. Could you advise on how to improve financial services to generate other income during COVID-19? So I think, I guess the reference is more to things like fees and commissions as opposed to interest generating sort of business.
Yeah, I'll pick a simple example, right, from the gig economy space. If you look at Uber and Lyft in the US, for several years now, they've offered both a premium and a regular payout to their drivers. And drivers can pay for the premium rail, which is instant settlement to their debit card, or they can wait and get paid more slowly. We're seeing across Asia a number of startups effectively trying to do the same thing so that employees can get paid the same day for their work, right? That's a premium service in some cases where there's a subscription from the company, a subscription from the worker, et cetera, because people need access to working capital, right? Small businesses need access to working capital, whether they're factoring their invoices and paying traditional rates, or they're doing something that enables them to get paid through real-time payments globally and then pay out to their suppliers through real-time payments, and they get discounted invoices because they're paying more quickly. That ability to make money move faster and to create more efficient use of working capital, I think is really the foundational thing to be focusing on right now, because money in hand is the thing that matters today. Whether everyone could crack off and use Kazad's APIs and start selling insurance, I'm not sure everyone necessarily has the trust relationship in place to do that. People that do have the trust relationship should do a lot of it, right? And should be really reaching out to people. People that don't, they really should be focusing on how do they serve their existing customers that trust them today better. So physical goods or food delivery, obviously it's about getting online, getting distributed, taking payment from as many people as possible, turning around and offering working capital to my suppliers so I can pay my food vendors as quickly as possible, pay my delivery personnel as quickly as possible, put the debit card in their hands so they can make purchases if they need to through a debit card. Those are all value-added services that are focused on speeding up the ecosystem that are not fundamentally different from the business that they're in. They're just better and faster. Adding whole new service lines, I would say, is probably not something I would do at this point in time, so much as make my existing business move a lot faster. And then take a premium service charge where I can to make that happen.
That's wonderful. Aarti, one quick question to you. Again, an anonymous attendee. So the question is more around, the risk, the security risks that come up when we talk about, an API economy sort of a scenario. So on one side, financial institutions have to open up. They have to democratize whatever services they have and make it sort of very embedded in all sorts of business that we see. But that naturally brings up a lot of questions around cyber threats.
Yeah.
So
Yeah.
if you could take a stab at that.
Yeah. So I mean, I've been reiterating how important security is, right? And just in terms of pure numbers, I want to say that analysts have shown that 1 in every 4 enterprises is prone to a security breach, and the average cost of a security breach is about $4 million US, right? So and then there's the naming and shaming that happens because of the security breach, right? So it is definitely very, very important. Another aspect that we are starting to see is insider threats. Like so far, when we talk about security, it was all about some hackers externally coming in and hacking into your system. But we also have to start becoming aware of insider threats, where your own administrators, super admins, whoever has all the access, may end up, doing some sort of malicious transactions, right? So that's another aspect. So I view security as 2 aspects, and that's what financial enterprises should be focusing on. One is the data protection part, right? So they need to make sure that they have the right infrastructure, they have the right tools, the right applications in place, so that the data is secure when it is inside the data center, when it leaves and goes somewhere else, or when there is a copy of the data made, right? So data is an asset, and that needs to be, we have to constantly make sure that it's protected wherever it goes. The second aspect, which is also becoming important, is the privacy, right? Which means there is data, but then who has the access to data? What is the life cycle of the data? Till how long somebody has access to that data? With the GDPR regulations and different regulations coming in, the auditability and the process that enterprises are following also becomes important. So data protection and data privacy, I would say those are 2 aspects that financial enterprises need to focus on. They're starting to focus on. They need to, make the right kind of investments and decision making to be able to protect themselves.
Wonderful. I'll just take one last question before we move on to the next segment, and then we'll have questions. We have a lot of questions actually, so we'll probably take up the next bunch of questions after that. Kezad, okay, this is a very interesting question. It's on financial inclusion. What could be, this is from Pratik Maheria, what would be the impact of COVID-19 on financial inclusion? And I think when we talk about financial inclusion, we look at payments, which I think we've done reasonably well, but India is, the subcontinent in general is still very underpenetrated when it comes to insurance. So, if we can sort of give that insurance angle to financial inclusion and the impact of COVID-19 on it.
See, I think financial inclusion as a sector is going to suffer some stress in the months that follow, because while the government has been, fairly profligate in terms of feeding hungry mouths and, keeping small businesses alive through, interim funding, the way I see it is that the challenge of collection is going to, affect a lot of businesses that are lending money to people to earn their livelihoods. Largely in these type of microfinance institutions, insurance is a layer to cover their, non-performing assets or, early deaths or whatever. So in my opinion, if you were to ask me, there is going to be stress in this sector. There is going to be stress in collection. There is going to be a lot more focus in terms of the quality of lives that are going to be insured and the kind of partners that insurers are going to work with. Plus, of course, a large number of these institutions are bank funded. So funding to them by banks itself is going to come into question in the near future. Of course, financial institution is a social good and the government does promote it. So I think the government is going to do a lot more as compared to private institutions to keep this sector alive, at least in the medium term of 12 to 18 months.
That's wonderful. So just in the interest of time, we'll move over to IBM's presentation right now. And once we finish the presentation, we will take up the next set of questions. We'll try and do as much justice to all the questions that are flowing in as possible. So let me hand over to you, Aarti, to spend a few minutes on IBM's point of view on why leveraging the right infrastructure is critical in delivering services in these challenging times.
Sure. Thanks, Salil, and I will try and keep it brief because I can also see some of the questions and very interesting ones. So I'll try and keep this brief. So Sunny, if you can move on to the next slide. Okay, so we've talked a lot about this. The new normal is an age of disruption, right? We talked about open banking. I don't want to cover it. This is just a context-setting slide. As we mentioned about fintechs, the one point I do want to make is while the fintech unicorns are rising everywhere, I would say in Asia Pacific, I've personally seen a lot of growth in this space. It's very surprising because we work with a lot of crypto players, crypto exchanges, and a lot of action is happening in Asia Pacific as opposed to the rest of the world. So there's the fintechs are definitely a big set of players in AP. We're also seeing a lot of big tech companies getting into this space, right? Whether it is Google Pay, Amazon, and so on. I think that these are not traditional companies who have been focused on fintech, but they are now entering this space. And the other aspect that we're seeing is also a lot of ISV consolidation, where multiple vendors are coming together, but most of them are equal size. Even banks in India, for example, you can see banks are coming together. So there's a lot of consolidation happening, both in the technology sector as well as in the banking sector. So this is sort of the disruption that we're seeing over the last few years, or a decade, I would say. So Sunny, if you can move to the next slide. What we see is that customers are, financial institutes are, facing these disruptive trends. On top of that, they also have to deal with compliance demands that are coming from governments for audit requirements of various nature. So they have to deal with that. They have customers who are now being spoiled for choice. So multiple competitors offering various different, goodies. So there's a lot of demand coming from the customers in terms of what they want to do. But the big baggage that a lot of these financial institutes are carrying is a very old infrastructure and application that needs some serious modernization. Because 5 years back, these trends did not exist. They had made some decisions about the infrastructure, about the application, which are now completely changing, whether it's COVID or whether it's all the other things that are changing in the industry. So there's a lot of baggage that these companies have to deal with. And what I would like to talk about today is one of IBM's offering. It's a platform called as Linux One, which helps to integrate in terms of the customer experience, helps to digitally transform your operations and to optimize your risk and security. So if you can move to the next slide, Sunny. So this is the platform that I wanted to talk about. It's called as Linux One, and as the name suggests, Linux, it's based on Linux. The Red Hat acquisition that IBM has done recently, of course, helps, but it doesn't necessarily work only with Red Hat. It works with SUSE, Ubuntu, some of the other Linux flavors as well. This is a platform that is built on decades of proven technology, right? That helps with scalability, that helps with quality of service, helps with performance, helps with resiliency. It's built for the cloud, and Joel talked about the cloud economy, right? So this is a platform that is very suitable to launch your operations directly in the cloud, or to launch it as in the brick and mortar manner. The biggest benefit I would say it brings, an immediate benefit, is the consolidation benefit. Now, what we've seen in the industry is that over the years, definitely the Linux adoption has been increasing, but enterprises have made choices of buying multiple Linux servers. So what happens is now they have a farm of Linux servers, and now if they have to plan for the DR of that, now they have to plan for the licensing cost of that. It could be expensive licenses like Oracle. So Linux One offers a consolidation benefit, both from a DR perspective or from a license perspective. And essentially, you can start on this platform with a very small footprint, and you can grow based on whatever the demands are, right? So it's the right fit for multiple business needs that you would have. So moving on, I just want to talk about the 4 pillars on which a recent launch. So there has been a launch of Linux One LT2. This is a new model that happened on 14th of April. And that has basically been set on these 4 pillars, and we've kind of talked about it through the conversation today. The first one is cloud native. So this is very, very important because a lot of the companies are moving to the cloud, right? So it's built on cloud native. It focuses on encryption anywhere, which is a security aspect that I spoke about. It focuses on cyber resiliency, which is the always on aspect that we spoke about. And it offers flexible compute benefit, right? And what I mean by that is there could be certain needs that enterprises have where there are certain high performance workloads when you need some special acceleration techniques. There could be certain workloads that need a lot of compression. So those kind of flexible compute benefits are available, and you can pick and choose based on the type of workload that you're going to be putting on this platform. So if we move on, quickly, I'll cover some of the key things that we are seeing, right, where this platform is very useful. So we spoke about cloud. When I talk about cloud in the AP context, I don't see a lot of customers necessarily moving completely to the cloud. We have seen a balance of private versus public, something that we call as hybrid cloud, right? So it's a combination of private and public cloud. And this is a platform that can really help you with that, kind of having the right balance. We are also seeing a lot of companies moving towards containerized applications. So essentially, these are application, this is as part of the strategy called as application modernization. Makes it very simple for companies to build applications, makes it very agile, and quickly have the application rolls out based on the demands that are coming in. So the platform offers itself towards for this cloud native experience. Next slide, Sunny, please. This is the focus on security, right, and then data protection that we spoke about. So this platform is all about providing features like pervasive encryption, where everything right from the data that's stored on the storage to data that's part of the system and being used in the system is protected. We call it as pervasive encryption. To having something called as DPP, or data privacy passports, where when the data leaves the enterprise or leaves the premises of the data center, it's like a passport control. So the data can go out, but the controller is still within your control, so that you can decide if you want to delete the data or stop having access to that data. So this is a very crucial feature that has been launched during this April 14th launch. And we are seeing a lot of customers having interest in the data privacy passport feature, and talking to many of them to be able to implement it for themselves. Sunny, if we move on. So this is about, we again spoke about it, right? Cyber resiliency. This is a platform that offers 6 nines, and it's not just, resiliency is not about just unplanned downtime. It's also about planned downtime. Right? We want to make sure that the planned downtime is something that is very quick and less painful, right? Both to the customers as well as to the enterprises that are executing it. So the platform is heavily focused on cyber resiliency. And heavily focused on strong isolation of the workload, so that on the same platform, multiple workloads can run and without having any kind of security threats. So I'll move on to the last slide in the deck. This is testimonials. I just want to sort of reiterate how customers have used the platform in the past. The first one is a testimonial from Techcom Bank. This is a bank, up and coming bank in Vietnam. And they actually started using this platform for a very small workload. And over the past 2 years, they've, moved about 3 or 4 different workloads on it, and constantly using this platform as a basis for moving workloads or taking on additional workloads. The second one is Visma, which is an entity in Netherlands. And they've actually used the platform as an end-to-end IBM solution, both hardware, software, all of it coming from IBM. And the last one is an example of ICU IT services. This is where they use the power of consolidation, where they were able to cut a lot of their database costs just by moving onto the platform, because there's a concept of per core licenses, and every core in Linux one, I would say, is almost 10 times stronger than the Intel core. So that by itself gives you, anywhere between 10:1 to 20:1 consolidation ratios, reducing your license costs. So these are some of the testimonials I want to leave you guys with, just to give you a sense of how different companies have used the platform for different needs. So with that, Salil, I'll hand it back to you. We have a few more minutes to take some of the questions.
Okay, so let me start with you, Aarti. I think there's a question which is very specific to technology. What have you been hearing from your customers across your industries, and what products have really seen an increase in demand? Is it on-prem servers, compute power on existing infrastructure, cloud signups, API gateways, ESB apps? So where have you really seen the demand really coming?
So I would say, given the situation, I would say number one would be the compute power on existing servers, because I think at this time, especially where some of the online transactions have increased, they really need something that can immediately be applied. So I would say, based on my experience in the last 2 months, I would say compute power, and with a focus on cloud. That would be the second in the list, because customers are realizing, or financial institutes are realizing, that for them to be relevant in the longer term, the need to move to the cloud is paramount. So that's the next step that they're taking. But the current immediate need is to make sure they're able to provide the services on-prem.
Right. Okay. Joel, let me come to you. I think this question is from Monica. With convergence of big tech in non-traditional areas, including payments and insurance, how can this disruption lead to the base of the pyramid getting the benefits, but in sachet-sized products for affordability and economies of scale?
Yeah, no, I actually like Monica, like all of your questions. I think it's a great question. As you democratize a product, as you take it mass market, as you take it to scale through the internet, naturally products tend to get simpler versus more complicated, or a lot of the complexity becomes concealed inside of the platform, right? The classic example being in the online music space, right? Where music 20 years ago was super confusing. All of a sudden it's now a click of a button and all this amazing stuff happens under the covers. But that's the result of that platform taking on that complexity is a product that feels very simple to the consumer. And as a result, many more consumers can enjoy the product. I think you're going to see that in every area. I would assume we'll see it in the insurance sector accelerating across the board. I'm an American. If you look at the insurance market in America, it's highly skewed towards term type of products, simplified car insurance, products that are easy to sell through a diverse distribution system. I think generally speaking, that's going to be true everywhere, because the mass market in aggregate is vastly larger than the enterprise market. And that's really where the money is to be made. Margins are better. But in order to serve that market, you have to be able to communicate at scale, onboard at scale, manage your AML and CFT obligations at scale, and then serve the customer at scale. And all of those things require intelligent simplification, at the same time taking complexity and pushing it inside of the platform in the right type of way, with a digital ecosystem that lets you manage handoffs under the covers in a way that doesn't impact the end customer.
Wonderful. Kezad, here's a question for you. I think it is very specific to any digital product that is being sold online. Do you think there is a need for new solutions for online sales? I guess the document sharing and co-browsing would be creating loss of sales. What's your take?
Yeah, so the way I see it is that, typically because we are still an intermediary driven organization, the challenge of, educating over 100,000 agents and, several tens of banking partners is going to take its time. But the way I see it is that, in the last 4 weeks, we've seen a 4x jump in terms of people browsing our website for, actually looking for, like Joel said, simple products such as term. So no doubt about the fact that, in India especially, The government has done a lot in terms of, open APIs to, manage your KYC, integrate, account aggregators to manage your AML, etc. The only problem is that people haven't really woken up to these ideas, but this is the opportunity for us to actually promote it. And if you were to ask me today, as I speak, I mean, it's not that, sales are completely dead in this country, because even today, what we find is about 95 to 98% of all our logins are actually coming online, because people don't have access to physical infrastructure, and neither do they have access to the customer. So even if the customer, for example, is uploading documents, we are using technologies such as, OCR and RPA to actually read those documents, extract data to ensure that we give them a close to real-time, experience in terms of policy issuance. Of course, the other very important thing that will, manifest now is a physical paper moving around. So typically in India, the regulator insists that you send a hard-jacketed policy document to every customer. Today, the postal services have been down for 6 weeks. So that with the kind of backlog that's piled up on them, I'm sure the regulator is also now thinking of, promoting a lot more of the dematerialized policy and moving away from this physical paper-based, logistics-based model, which is not tenable considering the load on the postal systems over the next 3 to 6 months.
Right. I think we've hit the hour, but probably we'll take one last question out of this. Aarti, let me put this very last question to you. With the situation unfolding, there will be tremendous pressure on finances for both companies and their customers. What products do you see emerging out of this adversity, specifically in the context of technology? Is it license renewals, subscription models, financing option for buyers?
Yeah. So I mean, let me start with what IBM is doing, right? So IBM has an entity called as the Global Financing Team. That's actually helping our customers both with a rental model or giving some kind of flexibility, whether it's in terms of warranty, it's in terms of the maintenance cost, it's in terms of deferred payment. So I'm sure that's a demand that's coming up in the industry, because there are definitely challenges with respect to financing, and the Global Financing Team in IBM is helping with that. And we are seeing a lot of these conversations opening up, right? That these are negotiations that are happening. And I think given the situation, everybody's aware. Definitely companies like IBM are being very flexible in terms of offering these benefits. So I would say yes, financial options are getting discussed, and IBM's IGF team is the one that's helping our customers in a big way.
Great. That's all we have time for today. There are a ton of questions actually. We couldn't unfortunately address all of them, but what we'll try and do is we'll try our best to send written responses as much as possible. So if you have any additional questions or feedback on this webinar, please do write to us at insights@gomedici.com. And you can also see the speaker LinkedIn and emails at the bottom of this chart. So please feel free to communicate with your questions to them. That's all we have for today. Once again, on behalf of MEDICI and IBM, I want to put my thanks out to the three speakers who took their time out to provide their insights and inspiration at such an important time. And most importantly, to all our attendees for turning out in very large numbers. Thank you very much. Stay healthy, stay safe. Goodbye.
Thank you. Thanks, Will. Thanks for the opportunity.
Bye-bye.